Good morning. It is January the 12th, 2017. Time for our disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Hey, we're under the threat of a 3-day ice storm starting to move in tonight. So maybe Friday, Saturday, and Sunday we'll get some much needed moisture. Unfortunately, it's forecast to be in the form of ice, which is the worst. Sleet's not bad, snow's not bad, rain's not bad, but ice really messes things up. So I hope they're wrong on their forecast. They usually do miss by a little bit. Okay, not a lot of news to drive today's markets. Not a lot of news to impact the overnight trading either. The biggest news was that Trump did not spend any time talking about taxes or industrial policy. And that's why stocks are selling around the globe. Trump is going to be attacked at every level for everything. The deal now is to delegitimize his presidency, to take his voice away, to hinder him at every possible step of the way. Trump spent a lot of his time in yesterday's press meeting eliminating the threat of a conflict of interest, even though he doesn't have to. Presidents are exempt from that, as are Congress and the Senator's conflict of interest, but he went way out of his way and went way overboard to make sure he has a clean hand. Meant nothing to the press. The press, all it was Russia, this, and this fake intelligence report put out by Clapper. He's responsible for that, and BuzzFeed, and then everybody's all in an uproar because he called James Acosta, CNN reporter, which really was the source of the story. They gave BuzzFeed legitimacy. So they're just going to have to suck it up and expect that every time they go out and quietly try to get their work done around the edges. Yesterday, the Senate cleared the way for the repeal of Obamacare. So stuff is being done, and it looks like all of Trump's nominees are going to get through no matter what the Dems throw up at them. So we'll see. But that was yesterday's news cycle. It was the overnight. Not much in the way of economy. The European economic news was much better than forecast, with the EU's industrial production jumping 1.5%, including Spain and Italy were a part of that number. So it looks like maybe economic growth is becoming a little more solid in the EU. China's demand for oil is behind the rally. An uptick in that is behind the rally in crude oil overnight. Plus, there were comments out of OPEC that we talked about and said, don't be surprised if somebody from OPEC comes out and talks about how the major producers are ramping down their production and meeting their agreed-upon quotas. So we know that market. We know what's coming. We know how they try to manipulate and support prices rhetorically. But crude is up off of its lows. So that 52.75, 53.75 would be the next sell zone. So what about for treasuries? Today is the 30-year auction. They can't move paper in a down market. The 3-year and 10-year have been very, very strong auctions. It's a yield play. I imagine the 30-year will be a pretty good auction too. We have jobless claims, 255. No one pays any attention to it. Import prices plus 0.7. That'll be tied to oil. Export prices plus 0.2. That's an advantage for our exporters. And natural gas minus 150 BCF. That could come in higher than that. Had a pretty cold week last week. If there is a news focus, it will be jobless claims. Natural gas naturally will be keying off of that particular number. So I think the direction of the E-mini and the 30-year auction will drive today's trading, and that's liable for treasuries to yield a trading range with an up bias. And we're going to play it that way. Okay, we're at 2.5 right now. We've got the break in the market at 6, so 5 to 9 is sell 1. 11 to 15 is sell 2. On the buy side, 29 to 01, buy 1. And 21 to 25, buy 2. It is really, we do live in such interesting times right now. There is no way that the press can claim objectivity or being anything other than propagandists for the left. And unfortunately, the Democrat Party has moved way to the left. There are people that I used to vote for in the Democrat Party a long time ago, but there are few and far between these days. Okay, looking at the 30-year, resistance begins at 20 to 24. So 27.31, sell 1. 3 to 7, sell 2. And it'll take a big spill in the E-mini, in my opinion, to like we had yesterday, to really push the market up. Support beneath us is at 8 to 12. So 1 to 5 is buy 1. And 21 to 25 is buy 2. Now, one of the nice things about our way of looking at the market is that we don't, because of all this false news, because of all the false statistics that are put out, we don't have to worry about the whys and the whos. We can just see that they are buying or selling, and we join them. And that greatly simplifies the issue. For us, if you're trying to trade pure fundamentals, we're always caught with the, is good news bad news, or is bad news good news, and we know how to handle that too. But if you're running, a portfolio, the thing that saves your rear end is the fact that you have to be 95, 97% invested. And so their battle is between them and their peers, because the guidelines for their funds dictate that you will be invested, and so that's not such a difficult constraint to work with, because you're only measured against your peers' performance. You're not measured on absolute performance. So they may whine, they may moan, and the rest of it, but you have to remember that most institutions are always long and looking to get longer. Okay, here we are, 5 to 7, sell 1. 9 to 11, sell 2. If we can't take out this 7 level right up here, then we've got a pretty good chance of getting back, getting stops below 1200. First buy will be 99 to 01, buy 1. The second buy will be 95 to 97. And the reason gold rally, according to the press, was Trump's failure to mention tax cuts and industrial policy changes. Always need something to write about, whether it makes sense or not. Okay, the euro is up pretty strong overnight. The ECB does meet this morning. No changes are expected in ECB interest rates nor current policy, and I believe that is correct. But we've had another very, very strong rally, and it's headed up. So going to the F1 screen to maintain a little perspective here. We've got this very, very clean break at 107. And you can just see this dent right here. You can see the low volume number is at 107, and we're at 107.04. If we get through that, the high volume number is 107.40, and you can see that we had this huge spill That was a huge rundown, and that was off of an ECB meeting and an announcement. So we are at resistance at 107. Looking at this screen, got the low volume number at 107.04 actually. Having a tractor at 40 that we talked about. So quite often we find that the highs are set in the overnight sessions. So 107.10 to 107.20, sell 1. 107.35 to 45, sell 2. On the buy side, 106.75, 106.50. Obviously, a lot of people are caught short. Nothing has really changed in the desires of the ECB for a lower euro to stimulate exports outside of the EU. The strong manufacturing, industrial production numbers out of the EU were behind, in my opinion, the rally in the euro last night, and they'll say weakness in RE mini is helpful. Okay, yesterday we left the market on crude oil anticipating positive comments out of an OPEC member, and we got them, and crude has rallied. And we also had an increase in, a perceived increase in Chinese demand. So 53 and a quarter, sell 1. $3 takes us to 53.75, that's sell 2. That also picks up the start, the spill. And crude normally moves in $2 to $3 increments, so nothing has changed. Iran, Iraq are still cheating. Russia has begun to cut down their production. They said they would plan on ramping down over 6 months. The major OPEC producers have cut their production. Libya and Nigeria were exempt from the deal. Imagine if Venezuela could get more out of the ground, they would too, as would Mexico. But we're not seeing news reports of that. Okay, 52.50, 52 and a quarter, buy 1, leaning against support. And then 52 even, 51.75, buy 2. The EIA numbers and the API numbers showed builds in crude and huge builds in products. So the fundamental news has been negative. The cheating around the edges reports out of OPEC members has been negative. But crude has rallied, and you can't forget that news-driven market, and if OPEC speaks, somebody will at least cover their shorts. Okay, the E-mini. We're stuck in a range right now waiting for a new piece of news to take us higher. I believe all of Trump's cabinet members or appointments will be confirmed by, no Democrats will vote for them. They'll all be Republicans, but they have the votes to do that. So I see us in a trading range. Best support is 55 to 60, and resistance is 70 to 75, and that's where we should think about putting on positions. So buy number 1 is 60.62. Until proven wrong, and 55.57 is buy 2. 69.71, sell 1. 74.76, sell 2. No news of any consequence. Hits equities today. Tomorrow, earnings season begins. I think with a couple of major banks reporting. And I imagine they will beat their earnings per share estimates. They have thousands of ways to do that. A mere flick of the wrist. Now, things will change under Trump. these companies will come under scrutiny for misreporting or overstating or puffing their earnings per shares report. They will be attacked for it. Under the Obama administration, they looked the other way. So, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.